Hello, everyone. So, financing Agile delivery with forecasts. This has been a topic that I keep hearing is very interesting to many people. So hopefully you find it interesting too. And don't mind me, I have a little pocket recorder. I just don't want to crush when I sit down. So, by the way, we are taping this not to call you out and say, hey, you talk badly about your company and we've got proof and blackmail leverage. We put these on our website so that people who can't make it can come and see some of the talks that we do. So that's why all the cameras are here. Anyway, let's get started. So a little bit about me. I'm really passionate about solving these big problems in the Agile industry. And what I mean by big problems are the ones that sort of are in that interface layer between senior leadership and the people doing the work. There's all kinds of friction that we find in those layers, and those are the kinds of things I like working with, like talking about, like thinking about, and like helping my companies get better with over time. So what do? I'm the principal advisor with Responsive Advisors. I started this company like 2.5, a little over 2 years ago, something like that. And we're growing. We're up to 6 now, so it's fantastic. Half of us are here today. And half the company is here right now. It's that big of a deal. I'm also a national public speaker. So this talk I'm doing 4 times this year, not including this, so actually 5. I've got one more round in Orlando in November, and I'm hoping it's really cold here so that when I go there, it's kind of pleasant. And I like talking about all kinds of these issues in the Agile space. So it was just at Agile 2018. It was a great showing. Hundreds and hundreds. I think there was 2,400 people there this year. So it was a really, really big Agile conference. It's pretty awesome. So a little bit about us. I mean, just a quick blurb now that I have a captive audience. We do organizational Agile transformations. And if you don't know what that means, stop by my desk after class. We can talk all about it. So we turn legacy companies into Googles. At least that's the idea. What else? Oh, we offer these training classes. You probably heard of them, Scrum. I'm a Scrum.org trainer, and so is Jordan. So we run these public Scrum.org, Scrum Master and Professional Product Owner courses in LA, New York, and Chicago. So we do them a lot here. If you want to stop by and take a class, let me know. But other than that, let's move forward. This is how it usually starts with most companies. You've been doing things the same way you've been doing them for years and years and years, and eventually you hit a wall. And you know this isn't going to go over well. You've got a date. You know you're not going to hit it. You know no amount of Accenture consultants with unlimited budget is going to solve this problem. They won't de-scope, and they won't change the date at all. What do? So what traditionally happens is we send some people to a class. Oh, let's fix the whole company. We're just going to go learning Scrum and Kanban and something like that. Anybody intimately familiar with this problem? Switching over to Scrum? Yeah. All right, so we fill our heads with all kinds of wonderful knowledge, and we learn all kinds of great things, and we practice, and we practice, and we practice. We try different things. We try sticky notes. We try JIRA. That doesn't work, so we got to get an administrator for JIRA. That still doesn't work, so then we get like 20 administrators for JIRA, and then you realize maybe JIRA is just too powerful, and we should just go back to Post-it notes. But either way, there's lots and lots of things you can be learning. Eventually, hopefully, you get to this point where we're hitting 4 stars, happy customers. This is a pretty good place, I think. So if you do get to this place, or you are at this place now, congratulations. Not everyone is quite there yet. But I'd say you're winning if you got to that point. Right? Little kid with a punching glove. So if you've gotten to this point and you're doing it well and you're delivering frequently, and what I mean frequently is these things can actually go to production or you're actually shipping them frequently, that's a good state to be in, and I'd say you're definitely winning at this point. But you can't get around this. Somebody's going to ask you about the money. They're going to say, when is that thing going to be done and how much is it going to cost? Anyone had that problem before? Okay, it's something like October, it's like budgeting season. Right? I need to know how much it's going to cost for everything we're going to do next year. And you're like thinking, well, wait a minute. How is this going to work? We do things in sprints, not in big projects. And so that generates some friction. You guys feel that? Anybody here dealing with the budgeting problem? At least a couple of you? The rest of you guys just like the cheese? Well, you're here for something. So yes, it's common to have this friction layer. And those are the big problems I like solving. How do you deal with this friction layer? How do you get executives who've never been to a Scrum class, they don't know anything about software, and they just need a date and they need a number so that they can do their planning and everything's easy for them? It seems a little one-sided to me, but we'll talk about it. So
the date usually kind of mandated up front? It's not like you get a choice anyway?
Yeah, sometimes. The CEO comes out and says, we're going to introduce this new software package next year on December 31st. And you're like, wait a minute, I haven't even heard of this yet. Why are we committing to that date? It's all too uncommon. Microsoft used to do that back in the day, and they stopped doing it. Windows 8. Sorry. So if you are confused, perplexed, this is a common problem. We're seeing it in so many different industries around the country. It's not an uncommon thing. And what we find is that if you want to build an Agile organization, there's more to do than just train up a bunch of developers on how to use Scrum. I know, coming from a Scrum trainer, right? So there's a lot of different areas you got to address, like contracting. How do you create contracts that say you're going to get this by a date for this amount of money when you're trying to use some sort of an Agile delivery approach? How do you commit to those kind of dates? What about finance? How do they do their jobs when you're saying, whoa, hold on, we've got stable teams. Can you finance us in sprints? And they're like, no, just tell me when you're done and how much it's going to cost, because I want to write that number down. What else we got here? HR. You guys have HR practices that bonus the individual and give raises to the individual, yet you're asked to work as teams? Yeah, these are all those friction layer problems. And so making an organization agile is about addressing all of these things. But today we're going to talk about the financing side of stuff, the money. That's really what we're here to do. So what do you think? You guys got people sitting around you, love for everybody to kind of get to know each other. Let's take just 1 minute and talk to someone next to you or a few people next to you. Do you think that estimates are helping or hurting our Agile teams? Go. I'll call you back in a minute. Yeehaw! That's my end of time timer. You like that, the banjo? I let my classes vote on the best of the worst of my timer buzzers. I know, just put you right there. It's got to be hotter there than it is here, I think. It's pretty hot here, though. I don't know how it gets worse. All right, what did we come up with? Are estimates helping or hurting our Agile teams?
Yes.
They are hurting our Agile teams or helping?
Estimates
Helping.
help within a certain tolerance level. Right?
Help within a certain tolerance
Time
level.
estimating, you're wasting time that could be used productively.
Well,
Okay.
I think the only thing that the estimates do is give you a standard to measure against over time. So maybe in the long run, you can kind of get a sense for how your estimates should be adjusted for realistic expectations. Other than that, I think they hurt. So.
Okay. Sounds like they can help or hurt. Any other answers?
I think estimates help facilitate a healthy conversation between the delivery team and the business stakeholders, because you can start to have a conversation about how much is the business actually willing to invest in solving this problem based on the return that they're hoping to see.
Okay, that's fair. All right, I've got an answer too. So here's just kind of the risk, right? If you're afraid to make an estimate because somebody's going to create an exactimate from that, and they're going to put you on a Gantt chart. Oh, Johnny said it was going to take 13 hours. I'm going to put development time 13 hours. And then I'm going to talk to Susie, who's doing QA, and she said 26 hours, and that's going to go on a Gantt chart too. I'm going to hold you to that number because that's the number you gave me. But whoa, wait a minute, that was an estimate. If that's the kind of environment you're in, you're going to do something like this. You're going to sandbag. You're going to add some padding to those estimates, right? Like, 13 hours, I better tell them 20, because the last time I took a few more extra hours and I had to work the weekend. So you'll buffer, whatever. And then there's this funny one, the say-do ratio. I love this. So one of my clients enlightened me to this technique. You tell your boss it takes you 12 hours to do something, but it actually took you 18. Your say-do ratio is 1.5. So the next time you say something to your boss about how long something is going to take, they're going to multiply that answer by 1.5, your personal say-do ratio, and they're going to put that number in their Gantt chart. Does that make sense? Like they create this buffer factor for you. So if you've created a buffer and your boss multiplied that by a buffer, why are we still late most of the time?
Is that for the whole project or like for the individual?
Could be either. I mean, I heard it more from an individual, I think, dealing with project managers who come up with these numbers, and then they'd multiply times their say-do ratios. So yeah, we're late all the time, even though we've got layers and layers and layers of padding. So anyone ever heard of these little metrics? Yeah, what do we have? Net present value, total cost of ownership, return on investment. Yeah. These are important things. These are used to make decisions in organizations like, hey, if we invest $1 million into upgrading SharePoint, are we going to get anything out of this? What will be our return on investment? Do we save money and costs later on? I don't know. What do people use SharePoint for now these days?
Are the days of SharePoint finally over? It's like the access of our time. Anyway, total cost of ownership. So what's this going to cost me in the long run? Not just how much does it cost to build today, but build and support and then decommission, the total cost of ownership. And net present value, so the sum of all inflows minus the sum of all outflows, discounted for time, never mind. It's a financial thing. But a bunch of finance nerds are sitting around figuring these things out based on estimates we give them, based on all kinds of things in your organization. But let me point this part at the bottom. These are seldom reviewed. Anyone here know this for certain? Have you done these calculations? And then did you go redo the calculations after the project was over to find out if you got the ROI that got this thing approved in the first place? Nobody does that. Why would you do that?
So in theory, if you do the spiral model, which still isn't agile yet, but supposedly you review those after every...
If you did a spiral model, sure. Like if you reviewed these once in a while, I agree. They're pretty useful.
Better throw in a machine learning model into the system to make it work.
Machine learning model, maybe. But you should have some feedback mechanism, but a lot of finance teams aren't really implementing them.
Yeah, the budgeting isn't done that way.
Budgeting isn't done that way?
Most places, no, they're just throwing the money out there and then they complain when you run over.
They're focused strictly on cost.
If you run under, you spend it. Find a way to spend it so that they don't take it away from you, right? They're not really looking at ROI, they're just looking at blocks of money that have to go someplace.
Come to think of it, we do get a lot of people coming into our training classes at the end of December, right before Christmas. I always wondered why. Yes, people have budget to burn at the end of the year sometimes.
A lot of big companies may have some kind of formal stage gate model where they specify review milestones for some of these things, but...
I'd say the good ones do. But we're going to have to use some of these pieces of information to make some decisions. And we can help them, and we'll get to it. So let me give you a couple of concepts to understand first. There are deterministic estimates where each activity has a planned value. Sounds a little like traditional project management, right? How many hours for development? Write that number down. How many hours for QA and design? And you put all this together, and you come up with a fixed end date. And theoretically, this should work. So project duration, that's a fixed date. We're trying to come up with a deterministic value for this. The total cost, this is what we're being asked for. What's that project going to cost us? Well, $1 million. All right, great. We can afford that. Let's do this thing. And oftentimes we try to think of risk and things like that as static entities. Like this one thing could happen or it won't. But a lot of times what we're dealing with are actually probabilistic outcomes. Elements that are random. They follow a distribution. Like how many hours is it going to take you to write a block of code? It may take you a different amount of time every time you do it because you get better, and so you might get quicker with it, or you find a new way to write it, or you just get sick of writing code the way you wrote it before, so you decide to change it up a little. All of these will add some variance in how long it takes to write a small piece of software. So then that would make the total duration of any particular project a random variable. Total cost, a random variable. This is sort of the reality. These are probabilistic outcomes. And risks. You never know what's going to blow up in 5 months. There's a risk, there's a probability that something could happen, but you don't know for sure. So here's another 1 minuter for you. True or false, we're Agile, so we don't have to commit to estimates or dates. We don't even have to do them because we're Agile. What do you think? 1 minute. All right, time's up. What do we come up with? We're Agile, so we don't have to do dates. Is that true? Not true. Not necessarily true.
You can commit to a date, but what exactly you deliver is wholly dependent on what your Agile team can actually get by that date.
Okay.
Fixed date, variable scope.
Fixed date, variable scope. So it sounds like we can do some estimates and we can maybe commit to some dates using some Agile technique.
We commit to our lowest potential.
Commit to your lowest potential?
You can only go up, buddy.
You can only go up. So set the bar nice and low. Was it under promise, over deliver? Heard that one before? Okay. What else?
I don't know if we're going to talk about no estimates at some point.
Not this type of talk. But yeah, there's this whole movement out there where people are saying hashtag no estimates. And if you really look at it, it's just a different form of estimation. But we're not here to talk about that. So have you heard this before? I mean, if people said this, we're Agile, so we don't do dates. Yeah, I keep hearing this over and over. That's a myth.
I've heard people say that.
It's a myth.
That's an excuse for not being accountable for value.
I think so too.
You can
An
say
excuse
you're
for
gonna
not being
have
accountable for
days, but
value.
you deliver value,
Sometimes that
right?
helps, though.
Hmm?
The spontaneity, inspiration, and so on.
It helps.
Well, I mean, some people could be terribly burdened by an estimation hanging over their necks like a guillotine, you know?
Estimation hanging over their head. Okay, sure. Yeah, so depending on how your organization treats estimates, these can work for you or not. And I can see why people might say this. Is that a fan? Anyway, so why should we estimate in the first place? Why do you think? We're professional software developers. What was that?
Just to get a better sense for your own performance over time.
Okay, get a sense of your own performance over time. Why else do you estimate? For prioritization.
Predictable delivery.
For predictable delivery? Okay.
Identify constraints.
Identify constraints. Okay. Let me give you some examples of where you're probably used to seeing some form of estimation that isn't totally far off from what you're dealing with on a day-to-day basis. Construction. Anyone ever bought a new home? I don't know if that's popular in Chicago, but I used to live in Wisconsin, and people get really excited about building a new home. Okay. I don't want to get into this mess, but some people do. They want to pick out their own, the paint color of their kitchen, like details I don't care about. But anyway, if you want to build your own home, this is an option. You hire an architect, they design you some plans, and you go to find a builder. Hopefully they can build those plans within some sort of a budget that you might have, and they build it. Takes, I don't know, a year, 2 years, end to end. Can be a long, painful process. Now, what's that?
And then it costs more.
And then it costs more. Yeah, so, I mean, they'll give you an estimate. They'll tell you, yeah, that'll be 2 years. It'll cost, I don't know, $1 million, something like that. What if they said, we're Agile, we don't do dates? We don't commit to these sorts of things because we use Scrum. Yeah, you're going to say, see ya. So they have to give you an answer because ultimately you've got to pay for it. Ultimately, you have to figure out when you can schedule that moving van. Are you going to pay rent on your old house while your new house is being built, and now I've got a mortgage and a rent, or a mortgage and a mortgage, or whatever? Nobody wants to pay double. So you want to get that timing right. So you're hoping they're finished right about the time you decide to move out of your old place, so you're only paying for one place for any extended period of time. So you're going to need an estimate. What about you go to the mechanic? Yeah, and do they give you estimates, or do they say, we're Agile, we don't do dates? Again, you need an estimate. Like, do I need to throw the car in the garbage can, or does it just need an oil change? How much is that going to cost me? $1 trillion for an oil change? I'm going to throw the car in the garbage and buy a new one. Fortunately, oil changes are not that expensive.
The other things like a mechanic or even a plumber, some of them might do estimates and explicitly say it's not binding. We might
Yeah?
go over. Others, promise you a binding estimate.
Okay, some mechanics might give you-
Legislated, you can't go 30%. I think it's 30%. So whatever they tell you, they can't go more than 30%.
Ooh, what if we had that problem in software development? What if you were 30%, no more than 30% over on your estimates could you ever go? That's scary, but interesting.
It ends up in very high estimates.
Ends up in high estimates? I can see that happening, yeah, because that's scary for them. And if they come in under, no big deal. You just don't want to come in over. So for most automotive things, like changing the oil, changing a tire, ripping out, I don't know, your exhaust and putting in a new one, mechanics do this every day. And if you go to the dealership, they do your kind of car every day. So they can give you a pretty good idea of when it's going to be done and what's going to cost. Unless you go in there and say something like, oh, my car doesn't start every 4th of July and only when leprechauns are in the neighborhood. And I mean, how do you figure that out? Like, if the mechanic has never done it before, how comfortable are they going to be with that estimate? Time and materials. I don't know. I got to replicate these conditions. I don't know what the problem is yet. It's kind of hard to give you a date. It's kind of hard to give you a cost estimate. So how does that relate to our work? Do you do repeatable work? Anybody who does software development? Well, hold on. Now, you've been coding for 20 years. You're telling me that you're going to code this next thing. It's not just the same as the last one that you just did?
Yeah.
Do you do repeatable coding work?
Sometimes.
Some of it.
Sometimes? Like, what's repeatable?
Boilerplate infrastructure, boilerplate.
Boilerplate infrastructure?
Kind of, scaffolding.
That's just like copy and paste, right?
Library, right?
Nothing changes. Just
But then that's where you're trying to do automation.
automation? And most developers just
With
copy and
library,
paste
you
Stack
can
Overflow
actually
anyway.
piece some things together and say, that's pretty much like this, that's pretty much like that. It gives you a
Okay.
ballpark, right?
All right, maybe. But here's another 1 minute for you. What can change when doing a large project?
1 minute. What can change when doing a large project? Priorities can change. That's true. What other things can change?
Everything but your estimate.
Everything but your estimate. So is that like the $1 answer in The Price is Right, where it pretty much covers you for everything? Yeah, there's a lot of things that can change. Anything else you can think of besides everything?
Team composition.
Team composition changes.
The health of the team.
The health of the team. Yeah.
Well, health
What do you mean, like?
What kind of health? You could mean the team dynamics. You could mean
Somebody
the
gets
physical
sick-
health.
Somebody gets sick, you
Yeah.
know?
physical
Yeah?
What's considered valuable by the business?
What's considered valuable by the business?
Gets a divorce,
company
you
gets
know?
It's true, yeah. Somebody gets a divorce. That could be disruptive. Somebody moves.
Gets disconnected from Wi-Fi.
Disconnected from Wi-Fi. That's a good one.
The market climate?
Market climate can change, sure.
Your fundamental understanding of the project itself.
Your fundamental understanding of the project itself. That's scary, but yes.
It's actually that.
Another company already monopolized that niche.
Yeah?
The product.
So popular answers include?
Oh, jeez.
You gave me a couple new ones to throw in there. I was hoping to fill in this space, but I only got that far. I mean, we can go on and on all day long.
Oh.
Any surprising ones?
That could just as easily be paternity leave.
Paternity leave? Yeah, true story. So I had a friend go on paternity leave, and he's a guy, so you're not like, oh wow, you're about to explode. It's obvious you're going on paternity leave soon. No, he let him know like 9 months in advance, and then when that time came, he's like, oh yeah, I'm out of here in a couple weeks for paternity leave. They're like, whoa, wait a minute. But we talked about it 9 months ago. So actually this happened where there was a woman that was on a project. Somebody in one of my classes told me about this. She was about to go on maternity leave. I mean, she was obviously going to go on maternity leave soon, and they were shocked. That's why I put that on there. It was just such a funny story. But anyway, so there's all kinds of things that can change, all kinds of things, and we keep committing to dates. It's kind of ridiculous. So what we do is a lot more complex than changing a tire.
Also, death in the family.
That's right.
Defense family.
Yes, I know I'm preaching to the choir here. What's that?
Oh, I just said also maybe death in the family or something, or friend's family and so on.
Death in the family. Yeah, we'll have to add some of those. I got a few more blank spaces. I can add these too. So yes, lots of things can change. What we do is not the same as repeatable work. What we do, in most cases, for software development, has never been done in the history of the universe. Does that shock you? Never been done before. If it had been done before, you just buy it off the shelf and use it. But no, it's like, I got to configure it. Or I'm going to copy and paste that architecture, but I'm going to make it tweak. Or I'm going to refactor this little area that's just not very clear and make it better. You're doing things. You're adding variables. You're adding uncertainty. So very difficult to estimate. But let's talk about forecasting. And let's talk about how that's done. Lots of different things we can do, right? So we can average things out. Oh, well, that took me about 4 hours, and that took me about 6. My average is 5. I'm going to go with that number. It's one way to do it. This is my favorite one. I like money. We should be friends. You guys ever see Idiocracy?
Oh, long time ago.
Oh, come on, that just went right over everybody's head. So there's the naive approach. I put naive in there. I thought he looked kind of naive. So anyway, moving on here. So the forecasts equal the last observed value. So that would mean in a Scrum team might be like, oh, our velocity was 16 story points per sprint last sprint. If we project that out forever, how far do we get? You might do that if you have one data point, like we've only been working together for one sprint. A naive approach is all you got, but it is a way you could forecast. Here's my favorite, the drift method. Now, I don't actually mean drifting in cars. Though, funny story, I was go-karting over the weekend, like these high-speed electric indoor go-karts. And one of the ones I had just had terrible rear tires, and I was just drifting this thing around all the corners. It was a blast. I totally recommend indoor go-karting. But so the way this one works is you take the first data point and the last data point, and you just draw a line, ignoring all the variance, and you just assume this is the trend that we can use for the foreseeable future. It's another way to forecast. Seasonal naive approach. So basically the naive approach, but factoring in for seasonality. Like, for example, we get more work done in the winter when everyone's in the office. Oh, wait, but then there's that flu thing that usually hits us. We're probably most productive in fall. After everybody's back off vacation, nobody's yet hit the flu season and gotten sick. So maybe productivity's the highest in that, and lowest in the summer when everybody's got beach brain or whatever it is that they have, or a little hungover from the party they went to last night. Winter, everybody's sick. Maybe spring is another time where we're pretty productive, but then everybody's thinking about summer, so I'm not really sure. You're going to have to track this one on your own. But you got to factor in sometimes seasonality to your forecasts. Time series, so there's a lot of other things you can do. We can apply some math. We can do moving averages, weighted moving averages. All these are techniques to forecast. Make sense? Here's my favorite, the Ensemble Forecast. So if we run a bunch of different models, this is something you might end up with. Like here's an example. You ever watch like a hurricane forecast? I know we don't have that problem here, but any ex-Floridians? And they have that what do they call it, the cone of death? Have you heard of it? Yeah. They're like basically saying, well, we've got this hurricane, and we're not really sure where it's going to go, but it could probably go anywhere in this range. And then they show that cone, where it's likely to go, but there's some variance. What they're telling you is it's not going to turn around and go the other direction, but it could move. And so they show you basically a variety of forecasts. But this is kind of like a form of Monte Carlo analysis, which we'll revisit here in a little bit.
That one looks really unhelpful.
Unhelpful? It's unhelpful way out here, that's totally for sure. More helpful in here. Notice how we have pretty tight tolerances for range. One model brings it way out, but up to about here, it's useful. Out here, it's ridiculous. So, I mean, you don't have hurricane forecasts that are like 6 months long, right? They're like a couple of days. A hurricane forms, and like, oh man, we think it's going to be here in a few days, but they're not projecting this thing out for 2 months. They just don't know. So let's talk about forecasting the weather. This is like basically Chicago weather. Seem about right? All over the place. I mean, this week it's hot and humid. Last week it was in the 70s and perfect. I'm sure it'll be snowing next week. Yeah, this is probably going to be Tuesday, right? It'll be in the 20s. So does anybody hold the weatherman accountable when he's wrong or she's wrong about the weather forecast?
You should.
We should hold them accountable. Absolutely. So you went out, you forgot to grab your umbrella, and it rained on you on the way to the L. Blame the weatherman, right? No, we don't do that. So turns out weather data collection is a crazy thing. There are thousands of sensors all over the place. We've got them in outer space. We've got them on cruise ships. We've got them on freight liners. They're on airplanes. They're on trains. They're everywhere. Thousands of these things, all feeding them into supercomputers. And we still don't get the weather right. We've gotten better at forecasting it, but there's just so many variables to account for. What else? Yeah, I found out there's like over 1 million observations per day that feed into these supercomputers to understand weather. That's a lot of data. A lot of data. So some weather variables. I mean, I'll just pick on a few, right? How hot is the sun? Where is the sun? Where is the earth in its tilt? Air pressure, that's a changing thing all the time. These affect the weather in a meaningful way. What else is good here? Small change. So you ever hear this idea, the butterfly effect? Sure. So a butterfly flaps its wings in New York. It can influence the weather in Tokyo. That's sort of the idea. It's a very complicated, arguably complex environment. So we can only forecast this. You're never going to commit to a date on these things. But my favorite 1-minute question now. Do you think it's possible to use a Gantt chart to predict this Christmas's weather? Go. So what do you think about predicting the weather using Gantt charts? What do you think about a Gantt chart to predict this Christmas's weather? It's only a few months away. This is totally doable.
Let's face the moon count.
Sure. It was a full moon yesterday, I think, right? No, Sunday. What do you think? Why wouldn't we use Gantt charts to come up with a date? I mean, we've already got the date. It's Christmas. What we want to know is what the weather is going to look like on that day. We have a general idea. Would you commit to a Gantt chart? Why does that seem weird?
There's so many variables.
There's so many variables. We kind of already covered that, right? But we already covered all the variables in product development. Why are we using Gantt charts for that?
Because you manage it.
You manage it.
You can't manage the weather.
You can't manage the weather. Oh, that's interesting. So I'll kind of challenge that one. Can you manage all these things?
No, but you can convince yourself you can.
With enough lies, it sounds like the truth. Yeah. Personal life problems. Can't manage that. Can't manage a divorce. I mean, not really. There's so many things that are just unmanageable in product development, but we keep committing to dates on Gantt charts.
I mean, you can't manage, but you can handle them. I mean, you can't predict them.
Mm-hmm.
That somebody's going to get divorced, but you can hire them.
You could hire a temp. You guys ever hire new people in the middle of a project, especially when it's running late? How's that usually go? Yeah, it's kind of hard to ramp them up while you're under pressure to get something done. And don't bother me right now. I got to do this thing. And they're like, but I can't be productive unless you show me where the frickin' source control system is. So yeah, there's some point where you really can't add more people. I agree that you could add more people early on, but as you get going, it gets more and more challenging. So what I'm going to do is I'm going to show you some ways we can forecast product delivery rather than trying to commit to dates and commit to numbers that are just fictitious wishes or fairy tales anyway.
Managing chaos is an oxymoron, but managing responsiveness to chaos is a different story.
I agree. You could manage your responsiveness to an environment that is highly complex and unpredictable. So let's look at stock prices. Anybody here have investments or have a 401k? Yeah. Now, another one, would anybody commit to the, where the index is going to, the Fortune 500, what am I thinking, S&P 500, where that's going to be at the end of this year? I mean, if anybody could actually predict that, we'd all be rich, or we'd all be poor. How would that work? Is that like the stadium effect, where if everybody stands up, nobody gets a better view? I'm not totally sure. But either way, nobody can predict stock prices. So what they do is they forecast them. And there's a bunch of different techniques. I'd say really two we're going to talk about. Fundamental analysis. Anyone ever heard of this? Yeah. Great. For those of you who have not, I'll cover it very quickly. Basically what you're going to do is you're going to look at the fundamentals of a company. Do they have a great leadership team? If not, I give their stock price a lower value. Do they make something people really want? Or do they make phone books and horses and buggies? Things no one wants. Do I expect their sales to go up or to decline? And that would be a factor of their market, the industry, the market as a whole, all kinds of things. The overall economy. If the overall economy is booming, maybe I'd expect them to do fairly well on top of that. So a lot of investors or people who are in it for the long haul are going to use this technique. If you talk to Warren Buffett, real big fan of this technique. Technical analysis. Anyone ever heard of this one? Yeah? So if you're a trader or like a day trader, you don't give a crap about the management team of Google. You want to know where the stock is going in the next 10 seconds because you're going to make these rapid trades and theoretically make money that way. A lot of people don't, but it's possible, and a lot of people use this technique, and they can make money doing it. But they're not concerned with the fundamentals of an organization. They don't care about the market. All they're doing is looking at the trend right now, and they need really fast, real-time information to be able to make these decisions really quickly. So if the price of an equity or a commodity or whatever it is that they're trading drops below a threshold, maybe a computer automatically executes a trade to sell it. Or if it goes too low and they think, oh, that's the pit of where it's going to be the lowest, a trigger hits again and they're going to buy that stock. And as it goes up, it's going to maybe hit a point and they'll sell it again. They make money off of those variances in the stock price. This is an example of a forecast used for the S&P 500. Picked one from a while ago. It's basically saying at the end of 2011 that by the end of 2012, we feel like the market is going to be here. No one committed to that. Does this look a bit like that, what do you call it, that an Ensemble Forecast I showed you? Yeah, you've got many, many forecasts. We've got an upper bound, 1583. We've got a lower bound, 1225. But we think 1351 is the right number. It turns out at the end of it, I believe, turns out it was like around here. Yeah, right there. So nobody's committing to this. You're not going to your financial advisor and they say, oh yeah, I guarantee 1583, you're going to get rich. Give me all your money. If they do that, they're breaking a law. I believe they do have to disclose something like past performance doesn't indicate future performance, or they have some fancy verbiage about that. So things happen, right? That was a scary time if you had all your money in equities when everything just dropped. You guys remember 2007 or 2008? Yeah, even your house, that went down by a lot. That sucked. Here's another way to look at it. I'm not going to talk a lot about this, but this is following, what is this, the market? Is this S&P 500, I believe? There's so many things on the slide. Ignore it. Who cares? They were tracking something, but what they realized is there was an upper and a lower bound to it. And it was rare for it to break out of those boundaries. So over time, this creates a forecastable trend where people can make decisions. Like, hey, if it jumps out of this range, I'm going to automatically sell. If it drops below, I'm going to automatically buy. And you can make a computer do this. But this is a way to forecast and see where things are headed. But nobody's using Gantt charts to predict the future in the stock market. So let's apply it to what we're doing here.
What?
The good stuff.
The good stuff. So the reason I was pointing to these other markets is because your senior executives are going to understand the weather and financial forecasts. They're going to get those things because they talk about it enough. They just think you're changing tires. So we need to talk about what we do as being just as complex as the weather or stock markets to be able to use the tools and for it to make sense. So my favorite F word lately is forecast. Talk about forecasting to your executives, and we're going to get there. So you got some initial conditions uncertainty. Here's a few, but really what we're concerned with is forecast uncertainty. What things are going to happen that could change in the future? Will technology change? Is anybody going to get sick? All those variables that we talked about before, a lot of these can impact your forecasts. Let's see, more things, more numbers, skipping that. But this one's useful. JIRA, who's using it? Love it? Gotta have it? Who doesn't like JIRA but has to use it? Oh, don't be afraid now. We'll delete that part out of the video. All right, nobody wants to speak up. So JIRA is a powerful tool, but a lot of people who don't know how to use it struggle with it, and they're like, JIRA is so stupid. I have to fill out these fields that are just dumb. No, you don't. You don't have to do anything. Just get your work done. JIRA was only there to help you. But this is a tool that JIRA gives you, I believe, for free out of the box. This is called a version report. You guys use it, right? Anyone else use this version report? So it's really simple. You just create a version in JIRA, and you give it a time range, and then you throw in all the work that you think has to be done for that version, and it builds this beautiful little ensemble forecast for you, just like that stock market forecast. And it says your projected completion date is here, and it gives you like a plus or minus 10% to factor in for uncertainty. But then as you finish work on the backlog, it updates your forecast automatically. As you add more work to the backlog, it updates your forecast automatically. Go figure, if I add more things in the backlog, it extends the date. Isn't that shocking? Yeah, because that's reality. And if you don't like that reality, this tool is going to help you make a change. Descope. This should go down, and then this date comes sooner, right?
So
yeah.
One of the things that you can't really tell here is that the dot to the left will give you like the earliest possible delivery date, and the dot to the right will be like what's the worst case scenario. So you actually have the best of both worlds.
Yep, that's the idea. What's the best? What's the worst? JIRA makes an assumption that it's plus or minus 10%. That completely depends on the variance of your team's output. If one sprint they get this many things done, and then the next sprint they get this many things done, I'd say that cone of uncertainty is going to be a lot wider, but JIRA won't account for it. So there's pluses and minuses. If you do this on a napkin, you get to do whatever you want, or do it in Excel, and you can pick that cone of uncertainty and those statistics that feed into it. But you can use this and then just keep using that F word, the forecasting F word, and talk to your executives about forecasting an end date. So here's sort of the punchline of this talk. I applied Monte Carlo analysis to come up with a range of possibilities for how much a project was going to cost and how long it was going to take. I fed in all this information at the top, and it came up with these answers at the bottom. And the idea is that you go to an executive and say, within 97.5% certainty, our project is going to cost $924,000 with a completion date of about 20 weeks. If I throw up in my mouth, that's totally valid. I can make a decision to change, to de-scope, add more people, do what you got to do. But this is as close to reality as you're going to get. They want a date. This is how we can give it to them. But we give them two other dates as well. You know, within 99.7% probability, under 1,000,004, right? 22.4 weeks. If you're not okay with those extra 3 weeks, let's talk about that. So what were my initial conditions? So I started with a team that had roughly 23, call them story points per sprint. That was their lowest velocity. Their highest was 40. Average was somewhere in the middle, assuming a normal distribution. Remaining work, 453 story points worth of work. Is anyone interested in how I came up with that number, or how you might? Yeah? Okay. So if you want to be able to come up with this number here, you have to estimate your backlog as far as you need to release plan. That means I need to estimate out at least 22.4 weeks worth of work to have the numbers that feed into this calculation. Do you guys do that now? Some do. A lot of teams don't. If you are using Scrum, formally there's this thing in there called backlog refinement. It's a time where you add order, estimate, and detail to your product backlog. Estimation is the key part here. If you don't estimate and you don't refine your backlog far enough, you can't produce this sort of information.
It doesn't necessarily assume that your
Yep.
up front, you might be estimating the higher level things in terms of
Absolutely. Estimating higher level,
yeah.
ballpark. So these estimates will change over time because things change over time. You learn more. You find out that was easier to do or this is harder to do. These numbers are changing over time. So what I did was I ran 1,001 simulations with the average number or the average amount of work a team is getting done varying every cycle. And it came up with some numbers over here. We've got a minimum and a maximum and a mean, standard deviation. So we can't just use the mean. Where is that here? 687,000, because that's the 50% point. There's a 50% probability that this project is going to cost that. What we really want is this. We want the other parts of a bell curve. We want up to that 97.5% point. So with 32 people in 4 teams, I also assume one thing with that. These are stable.
Yeah.
Those 32 people don't change. Those 4 teams are there for the life of this product. Because if that changes too, I've got to make my model a whole lot more complex. So if you're in a world where it's like, oh, how many hours did you work on this project this week? And you write that down, and you got to write that down for everybody, and all the people are changing all the time, this is going to be harder to do. Question?
How did you determine the values for velocity if you have multiple different teams operating with different velocity estimates?
Yep. So if you're going to have multiple sub-teams all with their own estimation scales, you need to find some way to have an estimate at the team or at the multi-team level. Lots of practices to do that. Sometimes you just have 2 different estimation techniques where at the highest level we estimate it like this, and as those things get done, we feed that into future estimates. So it's kind of weird.
Calibration stories.
What's that? You might use calibration stories. Lots of ways you can do it.
normalized story points.
You could do that. Very controversial topic, but
Assuming your sizing is within
yep.
the right range. Lots of ways.
At the end of the day, you just need some sort of estimation statistic at the highest level of these 4 teams if you have a scaled system. If this were just one team of 32 people, that's a different problem, but then it's not so challenging. Any other thoughts or questions on this?
Another question on
Yeah.
remaining work. Do you account for scope growth based off of historical scope growth you've seen sprint to sprint? So you give a sprint, you give a demo, you give feedback, that's added to the backlog. So on average, sprint backlog is going to grow each sprint.
I did not factor in the probability that it's going to grow, but what I factored in was, as it stands today, these are the best numbers we have today. So I would also recommend you don't just look at this one time. You look at this every week. And if you're using Scrum, you look at it every sprint review. Based on what we know now, this number can change, and it just did, right? Our velocity may change, and that's going to change these numbers down here. We just have to rerun that analysis.
I was going to say all bets are off every time the teams change, too.
Every time the teams change, yeah.
If you lose a team member, you're not going to have any good data for 2 or 3 sprints.
It could, but that would affect your velocity, I would expect, in an unpredictable sort of way.
I'm saying you're projecting forward based on this data here that's now useless because of the different teams. So
Yes, that is true. If you make a drastic change at a sprint boundary or wherever you decide to review this, and you're like, well, we just made a change and we lost 4 people and added 4 more. Yeah, we have the same number of people and the same run rate, but that may impact velocity as we go. But what I tried to do is distill these numbers down to the most basic things. Like if you had a thermostat, it can't predict how you're going to use the room. All it does is it goes, oh, it's 72 degrees in here. I'm going to kick up the air conditioner. It doesn't care what you're doing. This model doesn't care what's really coming up. It just takes where you were at and it projects that information onto the future. It's like technical analysis, really. It's not really looking at fundamental analysis. Yeah?
I have here, in order to do like your first instance of this, how much kind of information, estimation, whatever, do you have to do up front without falling into the category of, oh, I'm doing big upfront requirements and phases and stuff like that?
I know big upfront requirements upset people, but you do have to do enough of it to be able to come up with that answer. So you'd have to estimate enough of a backlog to come out with some sort of a this. Now, what I recommend you don't do is do this for like 2 years worth of work. Your estimates for that thing after 6 months are so fuzzy. It's like that, remember that little diagram, the Ensemble Forecast, where at some point it became useless? This becomes useless after some time horizon. I don't know what that time horizon is. It's going to be different depending on you and what you build and how unpredictable it is. The more unpredictability...
after you get out about 12 weeks, everything after that is kind of a crapshoot anyway, because really,
Could be.
12 weeks you have a pretty good idea. The stuff after 12 weeks, you don't have enough information yet to know if the estimate that they've given is even accurate, right?
It could be. 12 weeks, I mean, in your experience, maybe it's shorter for some. If you have a highly turbulent market where like every 4 weeks a new competitor emerges or every 4 weeks your customers change, then I wouldn't go more than 4 weeks.
Does your company have a particular regular cycle when you do budgetary reviews or something? A lot of them do it quarterly, for example.
Yeah. So we're gonna get into some of that.
It's at least quarterly, maybe more.
I think I agree. So if your head's about to explode, like that's totally normal. Most people are like, "Whoa, Rob, you just threw a lot of numbers and crap at us." Still, how do we use this? So we're not going to stop estimating. I mean, this is just a fact of life. People are going to ask us what we're going to do with their money, and we got to give them some kind of an answer. Is that fair? Yeah, something reasonable. We can reduce some variability in our estimates by trying to get stable teams, by focusing on getting things done rather than, I don't know, just sitting around and crying about how we can't get things done. What else? Smaller batches. So don't have like 2-year projects. Can you have multiple 1-month projects, 24 in total to equal 2 years worth of work? So if you can get your leaders to think more in small batches, it makes this forecasting a lot easier. Question?
So maybe you're going to get to it, but I think where we struggle with this is a lot of times when you're replacing a legacy system, so the business has a much more difficult time of thinking about it in these small batches, and they want to know how much is it going to cost to move off of the AS400.
Gotcha. Just rewrite everything you did before, but in .NET.
Yep.
All the requirements are there. We have the software to prove it. The thing is, you're not going to build it the same way you built it the first time. You might solve the same problems or some of the similar ones, but maybe the way you add permissions can be totally different. Maybe we can use, instead of some manual system, we can connect to Active Directory. So you got to think of it that way, like let's resolve those problems, but that creates new variables. You're not going to rewrite it the same way you did it the first time, even if you think you are. Anyone do a system rewrite and it ended up exactly the same as before and you actually had happy customers? Oh, wait, you had me right there, right? Have you ever done it the same as you did before, even just in a new language? No, there's so many variables. And we're back to this like, oh, well, what if the customer doesn't like it? What if they change their mind? What if they don't like that slick web interface? They like the green screen they had on that AS400. So let's talk about that more after we're done. It's a popular one. What else? Oh, probably good here. So I love this slide. But how frequently should we update these forecasts? Right? You're like looking at all these numbers and you're trying to make sense of the code and whatever. I mean, what makes sense to you? How frequently would you look at a Monte Carlo spreadsheet like this to give your executives an update as to how things are going?
Every 2 seconds.
Every 2 seconds. That would be awesome. If we could get real-time data and you could just put that dashboard and watch the numbers change, that would be sweet. But I don't know how you're going to get that kind of measurement because this is based on the output of a development team. Per sprint? Can you get your executives in a room every sprint?
You don't have new data except at the end of every sprint.
That's true. When things are done, you have new data. And the faster you can get little things done, the faster you can update this report. If you had 1-day sprints and you just get that much work every 24 hours, you'd have a report that could update every 24 hours. But that's up to you. You got to break work down really small and focus on getting it done. So a year, that's probably too long. So much can change. It's kind of like looking at the weather in May and then hoping by February the next year that things are on track, and they probably won't be. I want to talk about global warming, different rat hole. So I see Agile as a business problem. And this is a topic that I like to write about. Jordan and I like to talk about it, and I'll plug a meetup that we got coming up about Agile is dead. And we'll talk about that later. But anyway, it's a business problem. Think about being nimble as a business problem. You want a nimble business. The opposite is what? Rigid? Who works in a rigid business currently and is willing to raise their hand? I've worked in a few, and it's frustrating because you know there's a better way of doing things, but you're so stuck in doing things the way you've always done them. It's like the Titanic. We all saw the iceberg coming, but they just couldn't turn that thing fast enough. So something I've heard in the industry is something like get agile or die, or does that make sense? Like you got to be nimble or death is your future. At some stage, you will not compete. I can't wait for cable companies to see this very problem. Just recently, I noticed that my cable bill or my internet bill went up 25% for no reason. And I called them and I'm like, what's the deal? Oh, that was our introductory rate. Introductory rate. So they trick you into this like 1-year introductory rate and then they jack it up 25% every year for like 3 years.
How is this okay? And all of the cable companies do it. All right, that's a rat hole. But they're gonna see the problem when they get disrupted. Somebody's gonna figure out a way to cut them out of the equation. Maybe 5G is that technology that cuts the cord permanently. I don't know. But Agile teams require adaptable funding. And we need some tool to make adaptable funding possible, or Agile funding, Agile finance. Adaptable funding, I mean, this is kind of hitting that boundary layer of like, if you can get your finance teams and the people thinking about the money to think more like this, where they can change up their investments more frequently, you're going to have a lot better time. Sure, question?
So how do you win business when you pitch it as an uncertain estimate?
How do you pitch it as an uncertain estimate?
Yeah, like over another company that says like, oh yeah, it's going to take us 12 weeks and $100,000.
How do you compete with the liars?
Yeah, exactly. Because like if you're like, oh, I don't really know, but like I kind of know, versus somebody that's like, yeah, we got you.
That's a great question. So in the case of trying to develop a contract where you're working with them, my recommendation is focus at looking at the big problems you're trying to solve for a customer, and you got to kind of explain okay, let's say we get beyond the uncertainty portion of it. I can deliver you something of value in 2 weeks, and you can look at it, you can use it, and if you cancel the contract, minimal penalty. And I'm going to do this every 2 weeks until you've got enough solution or enough value that we can cut it off. At this point, we believe it's going to cost this and take this long. I'll know more in 2 weeks. This adaptive approach allows you to add late-breaking feature requests halfway in the middle of the project. That's totally cool. Oh, really? I can make changes as we go? Oh, yeah, that's totally fine. In a traditional project, you're trying to get perfect sign-off and approval so that everything is locked and loaded and nothing's going to change for 12 weeks, and that just doesn't work very well. Customers, find a new opportunity in the market and they go, hey guys, can you guys build this thing in because our competitor has it now? And you're like, nope, we got a signed contract. Now you're rigid. You're not making your customers happy. So if that's a benefit to them, I would try to sell it that way. I would also point out the fact that most companies that do try that 12-week, $1 million, all the scope you ask for approach are generally off. And if they're not off by date and cost, they're off by quality. There's only so many things I can give, right? Quality, scope, time, or budget. If you fix all of them, one's going to break if anything that you didn't predict happens. So that's kind of how I would try to pitch it. But a big conversation. Yeah.
Review the agile contracting style that you mentioned earlier.
I can, but let's finish this up and then go into Q&A because we're already at like 7:40 and hate to hold everybody hostage. Thank you for coming. We'll go into Q&A here next, and we'll stick around as long as we have time, and then I guess the security guards will come and drag us out by our feet. But thank you for sticking it out.